ABSA. Few banks in South Africa carry a story as layered, controversial, and powerful as this one. ABSA wasn't born as a single bank. It was forged through the merger of four major financial institutions alongside several smaller entities, each carrying its own legacy, politics, and customer base. Its roots stretch back to early building societies and the rise of Afrikaner economic nationalism, a history that once earned the group the uncomfortable label of a quote-unquote Apartheid bank. Some of ABSA's predecessors were closely intertwined with state power, blurring the lines between finance and politics. This relationship fueled long-standing controversy, from preferential low-interest government support running into the billions to deeper questions about how embedded major banking institutions were within Apartheid-era governance. Yet, this was only the end of one chapter and not the story itself. In 2005, Barclays arrived, pulling ABSA onto the global stage. More than a decade later, however, ABSA would reclaim its identity, now standing as an independent, ambitious, and continent-focused banking group. With assets over 2 trillion rands, more than 12 million customers, and operations across over 10 African countries, needless to say, ABSA is one of the most influential financial institutions on the continent. The internet will tell you ABSA began in 1991, but in this video, we're going further back, unpacking the institutions that came before it to truly understand what makes ABSA what it is today. I'm sure you can tell we have a lot to cover. So without further ado, welcome to another episode of Mzansi Business, and this is the story of ABSA Group Limited. Alright, before we begin, to understand the story of ABSA, it's quite also important to understand the history of building societies in South Africa. In the early 20th century, long before South Africa had a modern banking system, ordinary families still needed a way to save, purchase land, and build homes. Commercial banks existed, but they catered mostly to large businesses, mines, and wealthy clients. For everyday workers, teachers, and clerks, access to credit was limited. This gap gave birth to a powerful financial movement: building societies. Among the many building societies established during this era, one eventually rose above the rest: United Building Society, or better known as UBS. UBS did not begin with the glamour of a big corporate bank. Its origins were simple: a community-driven financial institution that pooled the savings of ordinary people and turned them into affordable home loans. Over the decades, UBS expanded its reach across the country, and by the mid-20th century, it had grown into one of the largest and most influential building societies in South Africa, synonymous with home ownership and middle-class aspirations. Thousands of homes, small farms, and family businesses across the country were financed through UBS-backed mortgages. As the country urbanized, the demand for building loans soared, putting UBS at the center of South Africa's growing middle-class economy. But UBS wasn't alone. Another powerful institution shared the stage: Allied Building Society, established in 1955. Allied built its reputation on steady growth, financial discipline, and a strong national footprint. It served the same broad market: ordinary South Africans seeking security, homes, and financial independence. It would later merge with one of the oldest building societies in the country, Johannesburg Building Society, and by doing that became the third biggest building society in the country. Together, UBS and Allied shaped most of the country's housing finance landscape. For decades, commercial banks handled corporate money, while UBS, Allied, and a handful of similar institutions handled the essential work of turning everyday citizens into homeowners. Building societies were not banks, well, at least not yet. They had to operate under strict legislation with limited services. They took in savings and granted loans. Anything more was forbidden. Okay, now that we understand the basics of building societies, right? I want to take the story back to the 1930s to understand how another important financial institution comes into the ABSA story. In the early 1930s, South Africa remained under the shadow of British colonial rule, with its economy dominated by mining, agriculture, and trade controlled by a small, entrenched elite. Political power rested firmly with white settlers, while the majority of the population, especially black South Africans, faced severe economic and social exclusion. Within this environment, many Afrikaners struggled to secure economic independence and a stable future for their communities. And in 1934, at an Economics Volks Congress in Kimberley, Afrikaner leaders gathered to discuss strategies for securing the future of their people. They concluded that achieving independence and self-sufficiency required having some sort of control over economic power. It was in this context that businessman Joseph Jacobus Bosman, together with a group linked to the Afrikaner Broederbond, moved to establish a cooperative savings bank designed to serve Afrikaners who had long felt excluded from the mainstream banking system. The Afrikaner Broederbond was a secretive, influential organization of Afrikaner men dedicated to promoting the economic, cultural, and political interests of the Afrikaner community in South Africa. On the 9th of July 1934, Volkskas Cooperative Limited was officially registered, with its board comprising of university professors, teachers, and Afrikaner cultural leaders, most with ties to the Afrikaner Broederbond. The following year, in 1935, the bank opened its first branch in Pretoria. The bank began modestly accepting savings, deposits, and offering loans. By 1935, it was already managing thousands in deposits and loans. At the time, South Africa was still using the pound. Also in 1935, Volkskas opened up a branch in Johannesburg, and from there experienced explosive growth across Afrikaner communities, as over the next 12 years they would go on to open a further 53 branches, and was closing the gap with all the imperial banks such as Standard Bank and Barclays. By 1939, the bank had grown sufficiently to meet the capital requirements of a commercial bank, and in 1941 it began issuing checks and offering current accounts, firmly transitioning from its cooperative roots into mainstream banking. In 1944, shareholders approved the transformation from a cooperative into a privately owned commercial bank, allowing it to compete fully with established institutions. The larger commercial banks tried to pressure Volkskas back into cooperative bank status by imposing high fees on its check transactions and refusing it membership in the clearinghouse of commercial banks. It is said that the established big three banks, Barclays, today's FNB, Standard Bank, and the Netherlands Bank, today's Nedbank, would not admit Volkskas into the bankers' organization and for a time would not even accept its checks. Yet the bank would recover by drawing on the strength of its Afrikaner support base, which continued using the institution out of loyalty and was also helped through the upsurge of Afrikaner nationalism. The rise of the National Party in 1948 further boosted the bank's growth. Many state accounts and contracts flowed into Volkskas, while Afrikaner workers, particularly those employed at parastatals, opened accounts in large numbers. This surge fueled a dramatic increase in the bank's assets. Also from 1949 to 1959, Volkskas issued banknotes for circulation in Southwest Africa, modern-day Namibia, from its Windhoek branch. Not sure when they expanded into there though. During that period, Namibia's currency system allowed several private commercial banks to issue their own banknotes. During the 1960s, Volkskas expanded beyond banking, investing in industry, agriculture, sugar production, real estate, hire purchase financing, and more. By the early 1980s, it became the first bank in South Africa to derive more than half of its profits from non-banking industrial activities. By 1981, its asset base had surpassed 5 billion rand and operated over 280 branches, 75% of them in rural areas, granting it exceptional reach beyond urban centers, making it the third largest of the 5 commercial banks by 1982. And yeah, also at some point, Volkskas changed its logo, but I couldn't find out when that occurred. By the late 1980s and early 1990s, as South Africa braced for significant political and economic change, Volkskas began departing from its Afrikaner-only image, positioning itself for a more inclusive future. Another important thing I want to mention is how Volkskas was deeply embedded in a web of cross-ownership with other major Afrikaner financial and industrial groups, most notably Sanlam and Rembrandt. At different stages, Volkskas held a 10% of Sanlam-owned mining company Federally Mainbow, which had stakes in mining giant Genco, and also once had a stake in Sanlam's Bonus Corp, an agricultural and industrial conglomerate. In turn, Sanlam held a 10% stake in Volkskas, while Rembrandt, led by Anton Rupert, owned about 20% of Volkskas. Not to mention that Rembrandt and Volkskas both had stakes in Transvaal sugar packers, makers of the Salati sugar. These arrangements were designed to consolidate Afrikaner economic power, stabilize access to capital, and retain control of key financial institutions in a sector dominated by foreign-owned banks. In 1986, a holding company was created to explore bringing several Afrikaner-aligned financial institutions under one roof. This company also listed on the JSE as well. There's also a whole lot of confusion about this holding company because some sources state that the holding company was already named Amalgamated Banks of South Africa, or ABSA. A significant event occurred in 1987 when Volkskas and United Building Society participated in a major share swap deal, with Volkskas taking a 30% in UBS holding company and UBS taking a 10% stake in Volkskas. This move gave Volkskas access to the home loan and financing space, and this cross-ownership created a strategic partnership that soon led to the formation of United Bank taking advantage of new regulations in the 1980s that allowed building societies to convert into fully commercial banks. The collaboration strengthened both institutions' market positions and laid the essential groundwork for future consolidation. By 1991, Volkskas, UBS, and Allied Building Society, a large national home finance network established in 1955, which, although not as big as UBS, had extensive national reach and also converted into a commercial bank during the 1980s. These three institutions would all formally merge. Certain financial interests of the Sage Group were also incorporated in this merger, culminating in the formation of Amalgamated Banks of South Africa, or ABSA, a new powerhouse in the South African finance industry with assets valued at just over 50 billion rand. But it's important to note that this new company was just a holding company, and all these institutions continued to operate as separate entities. The group expanded again in 1992 when it acquired Bancorp Holdings, the parent of well-known Trust Bank, adding a significant consumer banking portfolio to the new financial giants. Trust Bank, founded in 1954 by politician and banker Jan Marais, was a historically Afrikaner institution that developed a reputation distinct from some of its contemporaries. The bank grew steadily, and by the 1970s was sufficiently established to operate from its new prominent headquarters, the Trust Bank Center in Johannesburg, a sign of its institutional maturity. While operating within the Afrikaner economic sphere, Trust Bank was often regarded as more commercially pragmatic and less overtly nationalist in outlook than banks such as Volkskas. Ultimately, sector-wide consolidation led to its acquisition by Bancorp, bringing its independent existence to an end. Bancorp Holdings also included Senbank and Bankfin, but Bancorp would later become involved in what is today known as the Lifeboat controversy. This was originally a Bancorp problem, but once ABSA acquired the group in 1992, the controversy effectively became ABSA's problem too. During the mid-80s through the early 90s, Bancorp had been struggling financially after an aggressive expansion drive, and its collapse would have endangered thousands of depositors. To prevent this, the South African Reserve Bank intervened through a support program known as the quote-unquote Lifeboat, providing long-term low-interest loans to stabilize the institution. Bancorp then used these subsidized loans to purchase higher-yielding government bonds, a strategy that shored up its finances but indirectly benefited its shareholders, especially Sanlam, which was the majority owner before ABSA's takeover. In the early 2000s, South African Reserve Bank Governor Tito Mboweni commissioned the Davis panel to review the entire arrangement. The panel concluded that although elements of the bailout had been irregular and poorly structured, ABSA had paid fair value for Bancorp, including taking into account its liabilities, and therefore should not be held responsible for the earlier assistance. The panel also noted that the deal was illegal at the time, since the assistance, totaling just over R1 billion, was provided in breach of banking laws and the South African Reserve Bank's own protocols. However, it found that recovering the funds years later was neither practical nor feasible because of the legal complexities. For a while, this appeared to close a chapter on the Lifeboat saga, but we'll return to the story later on in the video. But essentially, many felt that the Afrikaner-led government of the day was just favoring a historically Afrikaner institution. Okay, I'm going to backtrack now to pick up from the 1992 merger that brought Trust Bank into the ABSA fold. And remember, all these institutions continued to operate as separate entities, but following this, in 1997, the Amalgamated Banks of South Africa officially changed its name to ABSA Group Limited. The following year, the legacy banks that had formed ABSA were fully consolidated under a single retail brand, ABSA Bank Limited, with the consolidation completed by 1999. By that year, ABSA had completed its transformation into one of South Africa's largest and most influential financial institutions, both from a blend of commercial banking strength, nationwide building society networks, and deep ties to the country's economic history. And I'm sure we all gov that ABSA had that iconic slogan, today, tomorrow, together. I'm not sure when they officially started using it though. ABSA continued establishing itself as one of the big four banks in South Africa in the early 2000s, and by 2004 had over 600 branches and just over 4,500 ATMs across the country. Also in 2004, ABSA issued preference shares to the Watu Wonke consortium led by Tokyo Sexwale, giving that consortium a direct 10% stake in the bank, an important BEE milestone for the major bank. In 2005, Barclays plc, one of the world's oldest and most globally recognized banking groups, officially entered the story of ABSA Group Limited. It acquired a majority stake in a deal valued at up to 33 billion rand, making it one of the largest foreign direct investments in South African banking at the time, with Barclays initially securing 53.96% of ABSA, later increasing its holdings to approximately 56.1%, giving it clear voting control. For the first time, ABSA operated as part of a global banking powerhouse, with the integration bringing significant changes like the adoption of Barclays branding, upgraded digital banking systems, and alignment of corporate governance with international standards. That same year, 2005, ABSA itself would acquire the Barclays South Africa branch, integrating it within its own business division. In 2007, ABSA became the title sponsor of the South African Premier Soccer League, with the competition subsequently renamed the ABSA Premiership up until 2020. In 2008, ABSA and Woolworths formed a joint venture by ABSA acquiring a 50% share in Woolworths Financial Services to combine Woolworths' retail reach with ABSA's banking expertise, creating a powerful consumer finance entity under the Woolworths Financial Services brand. In 2012, Barclays and ABSA announced plans to combine Barclays African businesses with ABSA, and by mid-2013, ABSA acquired the share capital of Barclays Africa operation in a deal valued at around 18 billion rand. In return, ABSA issued new ordinary shares to Barclays, and Barclays' total shareholding in ABSA increased to 62.3%. In August 2013, the group's name changed from ABSA Group Limited to Barclays Africa Group, reflecting the new, enlarged Pan-African scope of the combined business and positioning the bank to tap into growing African markets. It continued to operate as ABSA in South Africa though. Also in 2013, ABSA launched South Africa's first fully integrated online insurance platform, allowing its internet banking clients to purchase and manage various insurance products online. By 2016, Barclays decided to gradually reduce its stake in Barclays Africa Group Limited, driven by regulatory, strategic, and financial considerations. UK regulators required Barclays to hold higher capital against international subsidiaries, which made it quite difficult for Barclays to keep hold of the international giants. Barclays also wanted to focus more on its core UK and US markets. Also, the currency volatility in Africa further reduced the attractiveness of reporting profits in pounds. Barclays' reduction and eventual exit allowed ABSA to regain full independence. By 2017, Barclays' shareholding had fallen to 14.9%, and ABSA embarked on a separation program, laying the foundations for its return to a fully South African identity. Remember the whole ABSA Bancorp lifeboat saga we spoke about earlier? Well, in 2017, the matter resurfaced prominently following a report by the public protector Busisiwe Mkhwebane. The report challenged earlier findings, including those of the Davis panel, and recommended that ABSA repay 1.1 billion rand, arguing that the original assistance had been unlawful. ABSA contested this, with the courts ultimately setting aside the public protector's orders. This case drew significant criticism for Busisiwe Mkhwebane and in many ways brought ABSA back into the spotlight of its historical ties with the apartheid state, just as the bank was trying to rebrand and modernize. In 2018, shareholders approved renaming the group back to ABSA Group Limited, and a refreshed brand identity began rolling out across South Africa. The bank reorganized to simplify its structure, strengthen retail and business banking operations, and enhance digital banking capabilities. Between 2018 and 2020, the rebrand extended across the continent. All former Barclays branded subsidiaries in countries such as Botswana, Ghana, Kenya, Mauritius, Tanzania, Zambia, Uganda, Mozambique were rebranded as ABSA, unifying the group under a single continental identity. In 2019, ABSA signed a major Pan-African partnership with Societe Generale to expand wholesale banking as well as other collabs, allowing both institutions to boost client coverage beyond their own traditional markets through an extended offering across 27 countries in Africa. In June of 2020, ABSA officially declared substantial completion of its 3-year separation program from Barclays, marking the end of the separation process. In 2024, ABSA became the official banking partner for the English Premier League and the African region. As of 2025, ABSA now has over 12 million customers across 12 African countries with just over 1,000 total branches, while employing over 37,000 people. Group revenue was up to just over 55 billion rand, and total assets sitting at a crazy 2.1 trillion rand, cementing its status as one of SA's biggest financial institutions. The bank also has global offices in the US and the UK, a non-banking advisory in China, and technology support offices in the Czech Republic. The group has recently acquired Standard Chartered's retail and wealth operations in Uganda and is currently exploring digital asset custody technology in partnership with Ripple. ABSA also plan on opening an office in Dubai by early 2026. So who owns ABSA today? As a publicly listed company, it's owned by the public and a variety of institutional investors, including a variety of global ones like BlackRock and Citigroup. The largest single shareholder is New Shelf 1405 Limited, which reflects shares allocated under ABSA's broad-based Black Economic Empowerment Program. The bank also sponsors arts, sports, and community initiatives focusing on culture, active lifestyles, and social impact. In arts, it supports the ABSA La Atelier competition and KKNK Festival for emerging artists. In sports, it titles the ABSA Cape Epic mountain bike races, the Run Your City series of road races, as well as being a sponsor for Betway SA20. And it also backs women's golf via the ABSA Ladies Invitational. There's also the ABSA Towers, which was actually previously the Trust Bank Center, but is now a residential building. ABSA also have the ABSA Money Museum, which showcases the history of money in South Africa. And yeah, guys, that's pretty much the ABSA story. There was so much to cover, so please forgive me if there's something that I missed. But this is one bank that has had a crazy story. From its building society and Afrikaner nationalism roots to navigating complex economic landscapes and ultimately becoming one of SA's largest banking groups. The bank has continually evolved to meet the needs of its customers and the continent. Today, it stands as a uniquely South African institution, deeply rooted in local communities, embracing digital innovation and driving growth across multiple markets. ABSA's story is one of steady transformation, shaped by South Africa's past, strengthened through global partnerships, and finally reclaiming its identity as a truly authentic African bank. And that's a wrap for this video. I just also want to say thank you so much for 10,000 subs. Truly appreciate it. If you like content like this, please consider subbing to the channel. I'm Lebogang, this is Mzansi Business, and I'm out.